So there is no doubt that the stock market has become one of the verifiable tools that have made lots of people billionaires today. You talk about Warren Buffett, you talk about Elon Musk, you talk about a whole lot of people that have leveraged on the stock market to build the kind of wealth they want for themselves. So that is why in today's video, I want to share with you questions that you must ask yourself before deciding whether the stock market is the right place for you, or investing in the stock market is the right thing for you to be doing at the moment, because of course we are wired differently and everyone is not the same. So that is why I always advise people to focus on the kind of investment that they can deal with. So in this video, I'm going to be sharing with you questions you must ask yourself before considering investing in the stock market. Welcome to my YouTube channel, Invest with Chikwesari. In this channel, I teach smart investment ideas using investment platforms and tools like the stock market, real estate, mutual funds, ETFs, bonds, and others. You cannot afford not to stay with me in this channel. In case you have not subscribed to my YouTube channel, do me this favor by hitting the subscribe button. Don't also forget to share your thoughts in the comment section, because I'll be there waiting for you. So, number one question I would like you to ask yourself before considering investing in the stock market is, who am I? Yes, you have to ask this question. You have to ask yourself this question. And for me, that is one of the most important questions you must ask yourself. Some people are people that have this mindset that if they must invest in a business, they must be mechanically involved. What I mean by mechanically involved is, being involved in the day-to-day running of the business. So they don't have the kind of, or they have not built the capacity to leave their businesses in the hands of others to run for them. So that is why you must ask yourself, or you must understand yourself first before thinking about investing in the stock market. Not only in the stock market, but any kind of business. If you are someone that does not believe in automation, you are someone that believes in being mechanically involved in whatever thing you are investing your money into, then you have to really consider whether you should be investing in the stock market. Because investing in the stock market is actually like committing your funds in a company that you believe in, and also in a company that you believe in their managerial capacity, and also in a company that you also believe that they have prospects in the future. So that means you are not going to be involved in the day-to-day running of the business. You can only participate through their annual general meetings, to put out your opinions, to bring about suggestions and others. But being mechanically involved, that is a no-no for you. So if you are in that category that believes that if you are committing your money in a project, then you must be mechanically involved, then the stock market is not for you. That is what I think, but others can actually think differently. Then the second question you must ask yourself is the company making money? Yes, this company that I want to invest my money in, or this company that I want to buy their stocks, are they making money currently? So if they are not making money, that means your capital, your investment is at risk. So you need to consider if that company is actually making money. I remember, some days ago, I saw this company on Nigerian stock market. They are not actually making money, but because of the social media hype, many people were busy buying the stocks of this company. And even up until now, many people are still buying the companies of this particular stock. They are not even looking at their annual turnover. They are not looking at their profits. They are not looking at the worth of the company. They are not looking at it. They are just interested about the social media hype, what many people are saying, or what I will call a bandwagon effect. They are just busy, putting their monies in this particular company. So that is actually one of the worst thing you can actually do for yourself as an investor, as someone that has interest in investing in the stock market. So you need to know, is this particular company that I have interest in, are they making money? What is their balance sheet? What is their debt? Their current debt at the moment? What is their future perspective? So if you cannot convince yourself, if you cannot convince yourself that this company is making money, then you need to be very careful. I'm not telling you not to buy. You need to be very careful, in committing your money to this particular company. And then the next thing is, do I understand the business of this company that I want to invest my money in? You need to understand. Warren Buffett said that he actually invests in companies that he understands what they are doing. So you cannot be investing in a vision or in an idea that you don't even understand what the idea is all about. So you need to understand, is it a company that is into agriculture? Is it a company that is into banking? Is it a company that is into manufacturing? So you need to understand what this company are actually doing. One of the reasons why we advise you to understand and know what this company is into is because some companies that are existing today do not have future prospects. So then when you understand what a company is doing, it will help you to make your decision to know whether that company has a future prospect. Because if they don't have a future prospect, then I'm so sorry, you may be putting your money in an empty pocket. Sorry, you may be putting your money in a pocket that have holes. In a pocket that has holes. So that is it. So you need to be very careful with that particular company. And then the next thing that you need to talk about is, this company that I want to invest my money in, do they have something unique? Is there something unique that they have? I'm talking about innovation, creativity. Do they have something that can actually, beat their competitors in the field? What else are they bringing into the markets that can actually help them to survive in the long term? So you need to ask yourself that question. So if it's the normal business that everybody is doing, that means you need to be careful, because competitors are out there and they can actually, send this company home. So that is why you need to be very careful. You need to study how unique this company is. Do they have what it takes to withstand competition? Do they have what it takes to thrive and also, to survive in that particular environment? So if they don't have all these things, they are just like ordinary business model. That means you have something to worry about. Like for instance, what is happening with Uber stocks today? You discover that there are lots of AVs and electric vehicles coming up in Europe and other parts of the world. So it's actually sending a kind of threat to Uber as a company. So now, what will now determine whether Uber will survive or not is if it has the ability, the capacity to survive the competitors, to survive what they are bringing to the table. And having that capacity depends on the uniqueness of that business model. If they are not unique, if they are just like the normal everyday, you know, uh, normal everyday business model that can actually be sent out of the market, then you need to think twice. So you need to be very, very focused, or you need to consider the uniqueness of that company, the kind of idea, the kind of innovations they are bringing to the table. So if you are not satisfied with that, that means you should not invest in that company. Then the next question you must ask yourself is the price of the stock of this company fair to its earning? Is it fair to its earning? Yes, the earnings that is publishing, is the price fair? Some stocks can actually be undervalued. So when a stock is undervalued, it means that the price is way the price is way below the actual price that is supposed to be. So when it is overpriced, it means that the stock is actually selling way above, its earning capacity. So these are the things that you need to understand. So, but don't worry, as far as you are with me in this channel, I am going to, take out some time to do a video that will cover how to value a company, how to all these price to earning ratios, price to book, value and what have you. So we'll be doing that so that you can understand how to know a company stock that is overpriced and also a company stock that is underpriced. So you need to, look into that. Is the price of that particular stock, is it fair to its earnings? If it's not fair, that means you'll be buying the stock at a very high price. And most times the dangers is that when you buy some stocks at a very high price and then the price now starts, readjusting or adjusting to its normal price, and at the end of the day you will now discover that you bought it very high, you bought it at a high price because the price have adjusted to its fair price. So that is the danger. Most times you now be holding profits, you'll be holding losses in your portfolio. So that is why we need to also consider that, is it a stock that is overpriced? Is it a stock that is underpriced? So you need to make that decision before you decide whether, you need to ask yourself that question before you decide whether you should be investing in that particular stock or not. Then the next thing that is very, very important is you need to ask yourself, can I hold this particular stock for a long time? Yes. Can I hold it in the long term? Let's say 3 years, 4 years, 5 years and above. If you are a keen follower in this YouTube channel, I have always stressed about long-term approach to stock investing. Stock market is not a get quick rich, strategy. It's something that really rewards the long term. We always say that stock market favors, or stock market rewards patience. We always say that stock market rewards patience, and that is true. So if you are someone that is interested in the short term, I will not actually advise you to, invest in that company stock, because stock market actually rewards patience. It's a long-term investment, and people that play the long-term approach always come out smiling. So that is why you need to be very careful. So that is why you must ask yourself this question: can I hold this stock in the long term, for a long time? That is it. And then the next important question that has to do with you, the investor, is, am I someone that like risk? Or am I someone that can actually, risk something in the long term? So if you are someone that can actually risk, or can actually take risk, or what we call calculated risk, that means you can actually buy that company stock. But if you are not someone that can take risk, if you are someone that is risk averse, you are always running away from risk, you don't like taking risk, especially long-term risk, then avoid that company stock. It's not for you. So those are the questions that you must ask yourself before committing your monies into that particular stocks, into that particular company stock that you are eyeing. I want to thank you so much for watching this video to the end. Don't forget to like, comment, subscribe, and also share this video so that others, especially other beginner investors, can see this video and also learn from it to decide whether they can be investing in stock market or not. So I will see you in the next video. Bye for now.